Hey, good morning, everybody. It's Paulo Brantz with Monday Market Update. Hope everybody had a fantastic weekend out there looking at houses, enjoying the cold, beautiful, wherever weather you're at. I'm going to tell you if the Niners, sorry, clearly I'm a Niner fan, if they can go into Philadelphia and beat them in the wild card playoffs, you can buy a house. Anything is possible. So this week, is a big week. And I'm going to tell you, if you're out there looking to buy homes, or if you're a real estate agent or a financial planner trying to navigate your clients, you really want to pay attention to this forecast more than ever now each week, because it's really starting to get interesting as it relates to interest rates, which, by the way, as more of the houses become more affordable, people that are homeowners, that are already homeowners, are going to benefit greatly, especially if you plan to sell. Now, if you don't plan to sell, it's just a number. It's a feel-good number. But we're going to talk about interest rates this week, why they've improved so much. It's incredible. We're going to see what's driving them, which I already did a little video last week on that. But we're also going to talk about, there's 5 things right now that if you are looking to buy a home, if you don't know these 5 things, buying a home is going to cost you more money. And I don't want you to pay more than you have to. You need to pay attention to this. All right. So let's get started here. Let me bring up the good old this week in interest rates. The first thing, let's talk about rates. Look at how much rates improved last week, 0.25%. Rates went down 0.25% from last week to this week. That is huge. VA is at 5.125. So is FHA. Conventional, 5.5%. Jumbo's at 5.625. Buying that home just got more affordable just in 1 week. This is huge. Now, these rates are shown with a point. The reason I show rates with a point where in the past I haven't is really 2 reasons. Number one is, all lenders are doing that right now, because we know, or they know, that you want the lowest rate out there. So that's how they display it. But more now than ever is that, when a house is sitting longer, or maybe it's a little bit overpriced, is you can get your seller to pay that. If you can get a 5.125 or a 5.5% interest rate today by leveraging the market and where we're at, you're going to win big time, and you are going to save a lot of money. Let's talk about 2 things here, especially now, is going to be the strike rate. Now more than ever, as we start approaching more towards closer to people's strike rate. And by the way, if you don't know what a strike rate is, this is if you bought the house, married the house, dated the rate. We're getting into that territory where you really want to start considering refinancing, because rates are so good. Remember, it's projected to go down. But we don't know where that floor is. And by the way, we're one event happening from everything changing. So what a strike rate is a rate that if we got to and you missed it, you would regret it. So if you don't have that strike rate, we got to make sure we put that together for you. And if you do, let's make sure we're monitoring it. Bridge financing, one of the biggest hangups in certain counties is that people want to buy first before they sell. They don't want to sell, then not find that house because of the limited inventory. On my YouTube page, there's 5 ways that you can buy before you sell. Take a look at that video. If you have questions on it, there's a QR code right there. Just set an appointment with me. It's free, no obligation. But there's so many amazing opportunities out there that don't just assume there's no options there for you, because there are. And we got them for you. I'm really excited to announce that on Thursday. I don't know why I didn't put Thursday there. Thursday, January 22nd, we're going to do, we, meaning me, I don't know why I keep saying we, is going to do a market forecast here for you. And we're going to talk about how you're going to win in today's market and some strategies that have been proven successful. Look, we closed a lot of loans last year. The reason that I bring that up is it's important because we have a lot of experience. We know what strategies work. We know how people are saving money. You want to show up, especially if saving money is important for you. If it's not, that's okay. You don't have to show up. Let's talk a little bit about what happened with interest rates last week. Why did we get that 0.25% reduction? Last week, President Trump orders $200 billion in mortgage bond buybacks. to lower interest rates. So it's really interesting how this works. If you didn't see my video, let me just recap it real quick. This goes back to like 8th grade, high school economics, where you have supply and demand. Remember, 30-year fixed rates are mortgage-backed securities. They're bonds and they're traded on the open market. And so what essentially Trump did is he shrunk the supply. So, right, you have a demand for a bond, and then you have the supply of bonds, and that where that equilibrium is, that's the price. But if you take away some of the supply, which is essentially what they're going to do by buying those bonds back, you're going to have to, the bonds become more valuable and the price goes up, given that the supply is the same. As the mortgage bond goes up, interest rates go down. So that's the theory. Now, it's a theory that I believe actually works just based off experience, because how interest rates went back up post-COVID, they stopped buying mortgage-backed securities, which put more bonds on the market, which lowered interest, or excuse me, increased interest rates. So it's a very interesting, it's a very interesting concept here that's definitely going to work. And by the way, if you haven't noticed, which this I'm definitely not trying to be political here, but Trump is obsessed with getting lower interest rates, which, by the way, if rates go down, buying power gets better, home prices are going to go up. This is a big week. What we have tomorrow is Consumer Price Index. Let me just touch on that just a little bit. Consumer Price Index is a measurement of inflation. Inflation is the kryptonite to 30-year fixed rates. And so that is going to either stall our rally that we've had, or it's going to continue it if inflation comes in lower than expected. We also have Producer Price Index, which comes out on Wednesday, which is essentially the same thing, but it is for businesses. Thursday, initial jobless claims. And Friday's a huge report. It's industrial production and capacity. Now, what would that have to do with interest rates, you might ask? If you are asking, that's a great question. If the production and capacity of a business is above 80%, what that insinuates is that they're running at full capacity, which is very inflationary. Remember, if we have to retain employees by paying them more, which is a sign of full capacity, that increase in cost is going to be passed to you as a consumer through the cost of their goods or services. So these are the reports that the bonds traders are paying attention to. That's definitely going to impact interest rates. So with that said, it's going to be a big week. If anything major happens, you know I'm going to send out a video and keep you updated. But if buying a home or if refinancing is in your plans for 2026, we do what's called a hopes and dreams conversation. Here's a QR code to my my calendar. It's free. We don't require applications. We're not going to pull your credit. We're not going to do anything like that. Utilize my 20 years of experience in this industry in helping families save money on their mortgage, or at best case, help them not cost themselves more money because of false information that they're reading online. My name is Paul Obrantz. I own Clear to Close Mortgage Brokers. I hope you have a fabulous week. And if I don't hear from you till next time, see you next Monday. Take care.